meet you now. You're watching Market Cafe with me, Kanishka Sarkar, and over the next 1 hour, we'll take you through all the global and domestic cues that you need to watch out for, and also tell you about the stocks that you need to keep on your radar today. But before that, let's get tracking the top global story today. Now, a major shift in global trade dynamics has unfolded. The United States has officially implemented a sweeping 50% tariff on Indian exports. Now, at 9:31 a.m. yesterday, 50% tariffs on Indian exports to the United States have come into force. Thousands of Indian goods spanning textiles, gems, jewelry, shrimp, they would all now face a steep rise in tariff rates when entering the US market. Now, all eyes will be on how the Indian market reacts to the much anticipated tariff imposement by the US. The Finance Ministry has cautioned that while the immediate impact of US tariffs on Indian exports may be limited, their secondary and long-term effects, they could pose a significant challenge. In fact, my colleague Sumita is here to give us a detailed overview on the tariff situation between India and US.
That's right. We're given to understand from government sources that India or the central government is expecting and hoping for some relief to come in on the additional 25% tariff penalty that gotten kicked off. Remember, it's been imposed on India's oil and energy trade with Russia. Meanwhile, we're also given to understand from sources that the Indian government is looking at holding meetings with a series of exporters over the next 2 to 3 days. These exporters will be from sectors which are worsted, for example, textiles, for example, shrimps, and gems and jewelry, amongst other sectors. And of course, what will be discussed, or what's the area of focus as far as these meetings are concerned? Well, there will be discussions on the diversification strategy for tariffs and how to further cushion the tariff blow to exporters. Other than that, we're also given to understand that India is, in fact, planning a targeted outreach program to 40 countries, particularly with respect to the textile sector, given the fact that it is one of the worst hit sectors as part of the tariff imposition, the additional tariff imposition that's coming from the United States. Some of these countries could include UK, Japan, South Korea, Germany, Australia, Mexico and Canada, amongst others. So focus is likely to be on traditional and emerging markets as well. Overall, if you see India's textile exports, they are exported to over 200 countries, but it is these 40 countries where the volume play essentially is at play, and they hold the real key to diversification. Exactly why? Because these 40 countries represent more than $590 billion in terms of textile exports, and of course it will be helpful if India maintains a targeted outreach as far as these countries are concerned. We are also given to understand that India is to position itself as a reliable partner as far as sustainable and quality textiles are concerned.
All right, thank you so much, Sumita, for getting us that detailed wrap on what these tariffs mean for India. In fact, we also caught up with a whole host of experts to decode the impact on India when it comes to these tariffs that US has imposed. Let's listen in to what they had to say.
If you're looking into the sector, roughly 55% of India's exports to the US is getting impacted with high tariff of 50%, which includes sectors such as apparel and textile, footwear, handicraft, carpets, chemical product, plastics, a wide range of labor-intensive sectors. All are getting impacted because on India now the duty stands at 50%. Our competitor in South Asia and Southeast Asia, they have a duty of around 20%, and therefore the duty differential is 30%, where the competitor is Turkey or some of the European countries, the differential is 35%. And therefore, with so much differential, probably in many of the sectors, Indian exporter may not be able to retain the US market. And that's a hit which in the short term we have to be ready to take. Though, of course, in medium to long term, industry is looking into new markets. They are also looking into the vibrant domestic market. But that's a challenge which we have to live for.
The negotiation that is happening between India and US is something that is going to take time. It is going to be a prolonged process, and we are coming at a very high level of tariff levels. Importantly, what we have to see is that the corporate performance, if you look at domestic performance, the top line growth of non-finance companies had slowed to almost like 3.8%. So my sense is that as the full effect of the tarification pans out, we'll need to see how it reflects going forward. As of now, it does look like, be it global exposed companies or domestic exposed companies, there is a considerable slowdown, be it consumer goods, auto sectors, even I would say even engineering goods and stuff.
If our estimate for, looking at what will be the impact of 50% tariffs on India's GDP growth for FY26, that is close to 40 basis points lower compared to what our baseline forecast is right now, which is 6.3%. That being said, I think, we also have to appreciate the fact that there are going to be certain offsets, when we are measuring or forecasting GDP growth and economic momentum this year. And those offsets include things like, the rural economy doing very, very well over the last couple of months, and we expect that momentum to continue going forward. That tends to have lower effects for, certain MSME sectors as well.
All right, so that's the expert view coming in on how the Indian economy is going to be impacted with this new U.S. tariff coming in. But before we discuss that further, let's also take stock of how the U.S. markets fared overnight. Now, the Wall Street that ended on a positive note with all three benchmarks advancing. The S&P 500 that gained about 0.2% to close at a record high of 6,481. On the other hand, the Nasdaq Composite that also added about 0.2%, whereas the Dow Jones Industrial Average that climbed nearly 150 points or 0.3%. However, in extended trade, tech sentiment sort of softened. Nvidia, which makes up nearly 8% of the S&P 500, that dropped about 3% even after posting stronger than expected second quarter results. But this sell-off spilled over to other chip makers as well. AMD, Taiwan Semiconductor and Broadcom, all of them slipped about 1% each. On the macro front, markets continue to shrug off political noise after U.S. President Donald Trump's surprise dismissal of Fed Governor Lisa Cook. Now, while Cook plans on a legal challenge, White House advisors have pressed her to step aside. For now, traders are seeing the little immediate impact on Fed policy, and heading into the day that is later today when the U.S. markets open, the street is pacing towards healthy monthly gains with the S&P 500 and Nasdaq up more than 2% each, and the Dow higher by about 3% so far in the month of August. Apart from that, the street will also now be watching on how chip stocks stabilize and whether the Fed controversy gains more traction going forward. Well, that's about the U.S. markets, but let's also take stock of how oil and other commodities are doing this morning. Now, oil did edge up yesterday, but as of this morning, it was trading slightly lower, after edging up overnight on a drop in U.S. crude inventories. If you take a look at the levels, U.S. WTI, that's at around $63 a barrel, down about 0.5%, whereas Brent crude, that's trading close to $67 a barrel, also lower by nearly 0.5%. Now, tariff concerns between the U.S. and India, they continue to weigh on the sentiment for oil. Meanwhile, putting the spotlight on the yellow metal, gold is largely steady, supported by safe haven demand. The yellow metal is trading near that $3,452 an ounce level, up about 0.1%. Now, this even as a stronger dollar and higher yield have capped gains. So that's about the commodity markets. But quickly, let's take stock of how the D Street closed day before, as yesterday the markets were shut. Now, the Nifty that closed below that 24,800 mark, way off the 25,000 levels we had seen touching in the week before. Meanwhile, the Nifty Bank that saw a fall for the third straight day. Now, in terms of other broader market indices, small cap index declined for the fourth straight day. Mid cap, on the other hand, ended below its 6 sessions low. Now, in terms of sectoral gainers and losers, FMCG was the top sectoral gainer, whereas Realty, that was the top sectoral loser over there. On the other hand, PSU Bank, Pharma, they all closed in the red, whereas metals, they also ended in the red. In fact, the energy sector, as in Nifty Energy, that saw a fall for the fourth straight day. IT, auto, they both closed in the red. So largely a very a day that ended on the negative side. So that's how the Indian markets also fared the day before, and let's see how today pans out. But moving on, Sharad is now joining us to take us through the F&O snapshot today. Sharad, over to you. How is the F&O setup looking like today?
Well, the overall FNO setup is very important today, especially with the monthly expiry today and the last trading session. There was a downtick in all the indices, including the broader indices. The India VIX, that is still stable at around 12 points, and the PCR all expiries that has actually come down, both for Nifty and Bank Nifty. But for Nifty itself, the long unwinding is happening, and today there will be a volatile hour of trade in the beginning as well during the closing of the session. I must say adjustments also took place, and today the effectiveness will happen. So there will be some volatility in the opening hour of trade. The highest open interest strike price for put it's 24,000, for call it's 25,000. But for Bank Nifty also, the activity suggests long unwinding, a higher change in open interest of almost 38% downtick coming in. 54,000 is put and 55,000 is call. The important Y numbers to look at the strike numbers. The FI long positioning, that has actually started to creep up and go up on the other side, and we are expecting that there would be more short covering in day's trade, and this number could actually go up. Earlier last week, the FI numbers, overall shorts were roughly 92-93 odd percent, and now that has actually come down to 85 to 86%. So there is a relief happening in certain segments when it comes to the positionings, while the DI long positionings are still stable at roughly 62 odd percent.
All right, so that's how the F&O setup is looking. Thanks, Sharad, for all those details. But let's shift focus now and take stock of all the stocks that are going to be in focus today and are going to drive the market action today. Ashesha, over to you. Which are the stocks on your list today?
Well, yes, first up, let's put the spotlight on the steel major JSW Steel. This is on the back of their expansion plans, where the company said that they will be setting up 1,075 crore iron ore project in Andhra Pradesh. So some expansion plans coming in, because of which JSW Steel will be in focus today. Meanwhile, Dr. Reddy's, a positive news flow coming in over here, where the company has received interim stay from Telangana High Court. This is on income tax reassessment proceedings for the assessment year 2021, and this is with respect to company's merger with DRHL. So some positive news flow coming in over here with respect to income tax proceedings. Dr. Reddy is in focus on the back of that. United Breweries, on the back of their expansion plans. This is 90 crore capacity expansion plan for their brewery in Telangana. This 90 crore will be fully funded from internal accruals, and it is likely to be completed over the next 1 year. So keep an eye out on United Breweries on the back of this expansion plan that has come through. Meanwhile, shifting focus to the pharma sector, then Biocon, where they've received US FDA tentative nod for its ANDA tablets. Now these tablets are indicated for type 2 diabetes. So again, positive news flow coming in for this pharma company. And lastly, Lotus Developers, they've reported their numbers, where revenues have declined by a whopping 49% on a year-on-year basis to come in at just 61 crores in the quarter gone by versus 121 crores that the company had reported same time last year. Profit after tax, meanwhile, has also declined by nearly 35%, but the outlook and the management guidance continues to remain very positive. So they've given revenue guidance of 1,100 to 1,300 crores for the full fiscal, and they also have 3 projects lined up till September in Mumbai itself. So although numbers were on the weaker side, guidance continues to remain positive for Lotus Developers.
All right, so guidance in focus for Lotus Developers. Thanks, Ashesha, for all those updates and all the stocks that we need to watch out for today. But Sharad, let me come to you now. Which are the stocks that you're watching out?
Well, in the last trading session, the textile stocks did take a beating, but there might be a reprieve for them, as sources to ET now suggest that India is planning a target outreach program for 40 nations to promote exports in the textile segment. But associations, however, have started showing signs of pressure as major textile hubs in India are under stress. Interestingly, TCS will be the next stock where another source-based story is there, where TCS is forming a new AI and Services Transformation Unit, which will be headed by Amit Kapoor. He will be the Chief AI and the Services Transformation Officer. Third stock, Interglobe Aviation, promoter Rakesh Gangwal would be selling roughly 3.1% stake in the open market likely today, with a total deal size of almost 7,000 odd crore rupees, and the offer price would be roughly 5,808 rupees per share. Up next, PB Fintech, positive news flow coming in as board has approved the reappointment of Yashish Dahiya as the Chairman, Executive Director and the CEO till July 2031, which means it's a 5-year extension. And lastly, Cohance Life Science is a neutral impact expected. MD had sold roughly 6 lakh shares. This is to provide loan for ESOPs, while on the other hand, there has been a credit rating upgrade from Crystal for their long-term ratings.
All right, thank you, Sharad, for taking us through all those stocks that we will be watching out for in today's trading session. But on that note, we'll take a very short break. Be right back with more details on the other side. China's Shanghai index that's trading about 0.4% lower at that 3,870 around level. On the other hand, there's S&P ASX 200, which is also trading lower as we speak. It's down about 0.4% at that 8,935 odd level. On the other hand, we have Hang Seng, Hong Kong's Hang Seng index, which is also trading lower, nearly 1% down as we speak, more than 1% down. It's now. It's trading at the 25,524 level. Next up, let's put the spotlight on Japan's Nikkei index as well, which is on the green side. It is also trading lower as we speak, just about 1% lower at that 42,394 level. So that's how the Asian markets are looking. In terms of South Korea's Kospi index, that's trading just about 0.4% higher, and on the other side, when other Asia Pacific indices are trading lower, Kospi index is trading currently higher. It's trading about 0.5% higher as we are awaiting the Bank of Korea policy decisions. That's how the Asian markets are looking, largely lower. But if we take stock of how the Nifty is expected to open, we didn't end day before yesterday around below that 24,800 level, and as we can see, a gap down opening is what we are penciling in. The implied Nifty suggests a downtick of 86 points at open. So that's how largely the market setup is looking like for D Street. So apart from that, let's also take stock of all the cues that we need to watch out for in today's trading session. First up, in terms of global cues, we have US Q2 GDP data coming out. Apart from that, we'll also watch out for initial jobless claims and see how that market reacts to that data. On the other hand, from the Eurozone, we have Consumer Confidence Index, ECB, that's going to publish its account on July's rate decision. So that's something key that we'll be watching out for. Now, in terms of some cues back home, it's the last day to buy shares to be eligible for a dividend when it comes to Bikaji Foods, Engineers India, IRB Infra, NBCC, Protein eGov, Vijaya Diagnostics, Whirlpool, and also Z Entertainment. So those are some of the cues that we'll be watching out for ahead of today's trading session. But let's shift focus to the IT services industry then. Now, India's largest IT services company, TCS, has created a new AI and service transformation unit that will be headed by Amit Kapoor as the Chief AI and Services Transformation Officer. My colleague Ankur Mishra is now joining us with all the details here.
Yes, IT company TCS has now formed a new AI and services transformation unit as per sources, and Amit Kapoor has been appointed as Chief AI and Services Transformation Officer just to head this division. Now, Kapoor will step down from his current role of heading UK and Ireland business, and who will replace him? Vinay Singhvi is going to take over as head of TCS UK and Ireland business in his place. Now, company has been focusing on AI for a while, and this is now a clear-cut direction which is paved by the company in the AI space, and new AI unit will integrate, therefore, all existing AI teams and capabilities. In fact, unit will work very closely with service units and industry groups. Remember, when we had interaction with the management during earnings, this focus was made clear that in this particular year, AI will be key focus of TCS, and now a separate division has been announced by the company internally, and all integration will happen accordingly.
All right, thank you, Ankur, for all those details. But shifting focus, now we have a very important meeting coming up later today between insurers and the Hospital Association. But before that, insurance industry body has hit back at hospitals. Now, insurance body, General Insurance Council, has hit back at AHPI's cashless suspension move. Now, what's it all about? My colleague Anurag Shah is now joining us with all the details.
As the tussle going on between hospitals and insurance companies. And before the meeting of Thursday meeting between insurance company, Bajaj Alliance and Hospital Association, now General Insurance Council, the body of general insurance companies, hits back at Hospital Association AHPI for withdrawing of cashless treatment. In a press release issued by GI Council, Council has said that withdrawal of cashless treatment is arbitrary and creates confusion and distrust among policyholders, and it's harmful for policyholders because in a critical situation, policyholders will be asked to pay upfront money, which will not be possible for many policyholders. And General Insurance Council has asked Hospital Association to withdraw the suspension order of a cashless treatment. Council has also stated that they have paid 87,000 crore of a cashless claim, and National Health Claim Exchange and Common Empanelment is beneficial for hospitals, insurance companies and customers, and therefore hospitals should not go against the Common Empanelment and National Health Exchange, and that is also mentioned by GI Council. So Hospital Association AHPI has announced that they will be suspending cashless treatment from 1st of September for Bajaj Alliance policyholders. There are 15,000 hospitals will not entertain Bajaj Alliance policyholders for cashless treatment. They are saying that rates are not revised, deductions are high by insurance companies. So these are the reason for the suspension. But on the other side, GI Council is saying that for the benefit of everyone, for policyholder, insurance companies and hospitals, common empanelment is necessary, and hospitals should not decide unilaterally a decision of suspension of cashless services for patient, because in a critical condition, in critical situation, it's harmful for patients and policyholders. So they should take back their decision of suspension. So before the meeting of Thursday, it's a strong statement issued by General Insurance Council.
All right, thank you, Anurag, for all those details. But shifting focus to some macroeconomic data, we had the monthly economic review coming in yesterday, and the Finance Ministry has come out with some key comments that we must take note of. Now, the ministry says that India's economy is standing at a very critical juncture, and S&P's recent upgrade is a testament to the robust macroeconomic fundamentals that India is looking at. Now, it also says that the economy shows considerable resilience, and the immediate impact of US tariffs on exports appear to be very limited. However, secondary and tertiary effects pose challenges that need to be addressed in the ongoing India-US negotiations that are very crucial and are, very critical to watch. And the ministry also says that India is very actively pursuing a diversified trade strategy. So in order to get some relief for exporters, now initiatives may not fully address the exports shortfall to US. However, initiatives are being taken place, and things should gradually fall in place. In fact, the PM announced a few initiatives focusing on policy reforms earlier this month. Now, talking about the GST reforms that have been proposed, and now we are still awaiting the timeline for that. The Finance Ministry says that the creation of task force for next-gen reforms aims to simplify regulations, lower compliance, and also provide cost, and it's also to ensure that cost to provide direct relief to households, and that would lead to boost in consumption demand. The ministry has also said that the next-gen GST reforms will boost disposable incomes, leading to better consumption. Now, these reforms are expected to reduce inflationary pressures on the economy and also reduce costs. So that's the word coming in from the Finance Ministry. But moving on, the government has also constituted a high-level forum to strengthen regulatory cooperation and boost pension product development. Prakash Priyadarshi is here with all the details on this front.
The government has set up a forum for regulatory cooperation and pension product development, a very significant development coming in. In fact, the forum will harmonize regulatory practices and investment standards across pension products. In fact, the Finance Ministry has come out with the notification after necessary consultation with all financial sector regulators and key stakeholder departments, where the forum will ensure robust systematic risk management of assets under management. Along with that, it will address consumer protection and grievance related issues as well. In fact, the Secretary Department of Financial Services will chair the forum where secretaries of DEA, MCA, Revenue, Ministry of Coal and Labour included as members. Along with that, SEBI Chairman, RBI Deputy Governor, IRDI Chairman and PFRDA Chairman also part of this forum. A very significant development coming in. In fact, the Finance Ministry has issued a final notification, and all these key aspects will be taken care of by the forum. A subcommittee has also been formed under Joint Secretary, Department of Financial Services, which will have dedicated discussions over this issue.
All right, thanks Prakash for all those details. On that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. Now, your first thoughts. Now, you know, there was some anticipation that this deadline may be extended, or there'll be some negotiation, and there'll be a date that we will have in, in focus. But nothing of that sort. So there's a lot of uncertainty there, and the tariffs have come into effect. So, what are your first thoughts there?
Yeah, well, first, good morning. It's always great to join all of you. And I think with respect to tariffs, we need to know, first of all, that this was expected. We knew that tariffs were going to come. And I think the main takeaway with respect to tariffs is that it impacts a relatively small portion of the overall Indian economy. Nonetheless, the impact could still be 30 to 40 basis points off of GDP growth, which is not great. But there's also a lot of exceptions. There's carve-outs to the tariffs that have been imposed with respect to semiconductors and pharmaceuticals and the likes. So it's not as universal as it might seem from an initial take. And I do think that the objective is to negotiate these down over time. So hopefully we can see a summit between Modi and Trump, just like we saw a summit between the president of South Korea and Trump this past week, where there was a favorable outcome with respect to tariffs, or at least, having the lower possible rate put in place. So I would like to think that we can have some constructive developments going forward, which would help markets with a sentiment boost, I think, both for domestic and foreign investors in India.
Right. Martin, what do you think is going to be the right, tariff rate? 50%, of course, is, very high rate that has been imposed on India. But going forward, as and when negotiations take place, what do you think is going to be an ideal tariff rate that India is likely to face?
Yeah, well, an ideal tariff rate with respect to truly open markets is probably something near zero, but that's not exactly where we are right now. I think moving down someplace in the line of what a lot of other Asian economies are paying, somewhere between 15 to 20%, I think would be a really, really good outcome for India, because it puts India on a level playing field with other exporting Asian economies. It'll put it on a level playing field with China. And I think that would be a very strong signal to the Make in India plans that Modi's trying to push, and especially increasing manufacturing capacity in India, to show that India is on the same level playing field as the rest of the Asian economies. And I think that would provide a very strong sentiment boost to foreign investors, that we can kind of wash our hands and know that India will be treated the same as the rest of the continent, and then any other special deals could be further negotiated after that.
Right, so 15 to 20% base tariff is what you've suggested. But, now talking of the markets, how do you expect the markets to react? And speaking specifically of India, how do you think Indian markets are placed now in the global scenario, given that we are facing this kind of high, 50% tariff from the US, and that's already come into force?
Yeah, it's amazing how quickly things can change, because I remember after April 2nd in Liberation Day, how Indian markets actually held up relatively well compared to the rest of the world, because India was seen as a ballast from a lot of this trade noise and anticipation that the relationship between Trump and Modi could lead to favorable terms and a deal being negotiated. And now here we are, where I think India is in the worst case scenario with respect to a lot of Asian markets. The good news is how strong the domestic market is within India and the fact that it is a largely consumer-driven economy, very similar to the U.S., which is not the case for a lot of Asian economies. So its ability to weather the storm, I think, is much stronger. I think the challenge, though, is you have this coalescence of weaker earnings growth that the Indian market has been facing, combined with sour and foreign sentiment because of the tariffs, because of weaker earnings, and also just the strength of, say, the Chinese markets and Korean markets in the emerging market complex. I think a lot of that has been a big contributor to foreign capital outflows from India. But I think a really important message for investors is that the Indian market is not a monolith, and really the opportunities within India, as I would argue this across any market, is very stock specific. There's a lot of really high quality Indian companies that are growing earnings, that are very solid compounders of growth, whose stocks have done incredibly well this year. And so I would encourage investors, instead of looking at it as an index, to really break it up and treat it and look at the Indian market with respect to long-term durable growth themes and invest in the companies that are best levered to a lot of those themes, whether it's increasing travel, whether it's the fact that you have a lot of finance and e-finance that's starting to take place, rapid service deliveries. There's a lot of opportunities, I would argue, within the Indian market that, because of the discount that foreign investors have, I think look very, very attractive as long-term investment opportunities, especially now with an entry point.
Absolutely. So India, of course, remains a long-term story, and that's the word coming in. But Matt, now do you think global investors, they are going to demand some kind of high-risk premium for Indian equities if this tariff negotiation continues for a long time?
Yeah, I think they already do. And so I think the benefit for India right now is that I think the direction largely can be constructive. A lot of the worst news, I would argue, is baked in with respect to tariffs, where tariffs are set right now. The wild card is Russia and what happens with the Russia and Ukraine war, and whether Trump tries to push India as almost the scapegoat for buying Russian oil. I think that's a lower probability scenario, but I think sentiment is already so negative. Indian markets have been very weak with respect to the rest of the emerging market complex that I think any news is going to be treated disproportionately positive for the market. And I think investors will see the relative discount, or the relative cheapness of India, at least on a shorter term basis compared to other EMs, and start to move money back in, or at least see the strength and resiliency of a lot of really good names like an M&M, for example, or Eternal, or a lot of companies that fit into these longer term durable growth themes.
All right. Thank you so much, Matt, for taking us through all those, important inputs and sharing your insights on how the Indian markets and the global investors are looking at Indian markets in the face of these tariffs that have been implemented on India. Thank you so much for joining us today and helping us with that perspective. On that note, we'll let you go.
Thanks.
All right, then. That was Matt Orton with his insights on how Indian markets are going to be impacted by the U.S. tariffs that have come into play yesterday. But moving on to some more domestic news, the tragedy struck Jammu as massive landslide on the Vaishno Devi route killed more than 30 people and left over 15 injured, with NDRF teams rushed in to carry out rescue operations. Meanwhile, Prime Minister Modi also offered condolences to the bereaved families. Next up, in Jammu and Kashmir's Kishtwar district, twin cloudbursts hit remote Margi village, causing flash floods and mudslides. 10 houses, over 300 canals of irrigated land, livestock and a bridge were swept away, while around 60 homes were inundated, forcing villagers to take shelter on nearby hillocks. Next up, senior off spinner R. Ashwin has called time on his IPL career. The Chennai Super Kings bowler has announced his retirement from the league on social media, thanking franchisees, the BCCI and IPL for the journey. Ashwin said while his IPL stint ends, he will now explore opportunities in other leagues worldwide. Well, as you can see, Ganesh Chaturthi has begun with full fervor across Maharashtra as devotees welcome their beloved Bappa into homes, housing complexes and grand pandals. Yesterday, the air echoed with chants of Ganpati Bappa Moria and beats of Thol Tasha as idols big and small made their way through the streets. And for the first time, the Maharashtra government has declared Ganeshotsav a state festival, lining up cultural events, competitions and awareness drives around forts of Chhatrapati Shivaji Maharaj, Operation Sindoor and the spirit of Swadeshi. Now, in just Mumbai, over 17,600 police personnel, mounted units, dog squads and drones are on duty to ensure safety. Lakhs of devotees are expected to visit iconic pandals like Lal Bagh Cha Raja, Chinchpokli, Ganesh Gali and GSP Seva Mandal throughout this 10 days of festivities. Moving on, now that the festive season has started, my colleague Anjali Palod caught up with the director of Vijay Sales on how will GST cuts impact this season's festive sales and what kind of sales are they anticipating already. Let's listen in.
So as far as offerings are concerned, more or less everything will be similar. Basically, there are three sorts of offerings. One is exchange offers, second is cashback offers, and most important of all is the EMI offers, where zero down payment would be there and a longer tenor EMI would be there. So I think these three offerings would be there. But this season, the best part is what the government has given to the consumers is the GST cut in large televisions and air conditioners and dishwashers. I think that is going to sweeten the festival more.
But Mr. Gupta, there is still some ambiguity on when these, GST cuts will come in and therefore when exactly the prices will drop, because it also has to come down from the companies to the individual products prices being marked down also. So what are you expecting in terms of when these things will come in, and do you think people might just hold off their purchases till then?
So basically, I think we are expecting it from first day of Navratri or maybe slightly a day or two earlier. And as far as the moment the notification comes in, the brands are all ready to drop the price. So that's not a problem. Yes, there are little few people who are holding back, but most of the people who needs it now will take it now. 10 to 15% people are holding back for the prices to happen, and which happens even otherwise at this time of the year because people are waiting for Diwali schemes to come in.
Alright, so that's the word coming from Vijay Sales. But moving on to some more global stories then. The chip giant Nvidia has reported its second quarter earnings which beat expectations, but shares slipped amid concerns about an AI chip spending bubble and Nvidia's stalled business in China. For the current quarter, Nvidia projected $54 billion in revenue, but its forecast assumes no H20 sales. Next up, HP reported its third quarter earnings which beat street estimates for revenue, led by growing demand for artificial intelligence-powered personal computers and Windows 11 upgrade cycle. HP's CFO sounds very confident on the PC market and expects continued momentum from Windows 11 refresh and AI PC adoption. Well, now why are dividend yield stocks attractive in an uncertain market? That's something that we need to watch out for. And how to identify these top large cap and small dividend yield stocks? Sharath, my colleague, is now joining us to tell us just that.
Well, we speak about dividend stocks when growth becomes a question, be it the domestic cues or the global cues. Markets are still digesting which side the direction would be there. That's why we have picked up the dividend theme today. And interestingly, this comes in when growth slows down. There is a stable income in certain companies and defensives are at play. In India itself, the dividend plays, they include PSUs, metals, FMCGs, which would be in focus. And there are certain stocks as per the report by Axis Securities where we have actually given two important views. First one is the large caps and the PSUs. Let's see which stocks would give you the highest dividend yield, and this is coming on the back of the last 12 months data. Vedanta gives a 8% yield, while Coal India, Hindustan Zinc and NMDC, all of them have given a 7% each dividend yield. Now do remember, these are the past data and regularly these data come up. ONGC also making it to the list from the oil pack with a 6% dividend yield to the investors. Also now let's look at the top small cap dividend yield stocks where the action is more there. Of course, growth momentum also comes in these stocks, but the dividend play, PTC and MSTC, they are giving double-digit dividend yields. That return is roughly 10% over the last 12 months. Also from the paint company, AkzoNobel, that's an interesting name, 8% dividend yield coming from there. And Castrol India, roughly 7% odd. Also making it to the top 5 list is All Cargo Logistics, giving a 6% dividend yield to the investors.
All right, thank you, Sharath, for all those details. But moving on, Reliance AGM is set to take place tomorrow. Now let's go to Ashesha to find out what are the key expectations from the annual meet this time around.
Well, yes, all eyes will be on Reliance Industries ahead of its AGM, which is scheduled to happen on the 29th of August at 2 p.m. And any kind of commentary that comes in from the management with respect to potential listing of Reliance Jio, that will be a key trigger for the stock going forward and perhaps value unlocking for shareholders as well. AI-related plans and expansion in FMCG and retail, this is also something that the street will be keenly watching out for in terms of the kind of commentary that we get from Mukesh Ambani. Let's also put the spotlight on the kind of announcements that we have seen over the last few years from Reliance Industries AGM. In 2018, they announced the launch of Jio Phone, which was available at 2,999. The big Aramco investment was announced in 2019. That was 1 year later. We also had a whole host of announcements that came in over the last few years in 2020, 2021 as well. But most important announcement came in last year, where they announced bonus issue in the ratio of 1:1. In 2022, 2 lakh crore of investment was announced for 5G. The retail also announced entry into the FMCG business. That was also a key trigger for the stock. And as I mentioned, last year they announced bonus issue in the ratio of 1:1. And some important commentary came in with respect to their telecom business, where they say that they aim to double their revenue and EBITDA over the next 3 to 4 years as far as Reliance Jio's performance is concerned. So some important commentary that we have seen from Mukesh Ambani in its AGM over the last few years in Reliance Industries. Meanwhile, as far as the stock performance is concerned, we try to analyze the data and try to decode how the stock has moved 10 days prior to the AGM, on the day of AGM, and 10 days after the AGM. In 2019, the year in which we saw some big announcements, the stock shot up nearly 7.5% 10 days prior to the AGM. In fact, the stock was up 10% on the day of AGM, although we saw muted performance after the AGM was actually done. In 2024, that is last year, the stock shot up nearly 2.5% before the AGM. And on the day of AGM, of course, we didn't see much announcement. So yes, some big announcements, if at all they come through, perhaps we will see the stock in focus tomorrow on the back of that.
All right, thank you, Ashesha, for all those details. All eyes on key announcements that may come out of the RIL AGM tomorrow. But moving on, let's shift focus to the aviation industry then. Now, Interglobe Aviation, the parent company of Indigo, that's going to be in focus because sources had earlier indicated to ET Now that the promoter family is going to offload stake. Rakesh Gangwal and the Chinkarpur family, they are expected to offload more stake in Indigo. The offer floor price has been set at 5,808 rupees per share. They are expected to offload about 12.1 million shares. Now, this offer size for the stake sale is likely going to be at $801 million. Now, that's the stake sale is likely going to happen today in a block. Now, just to give you an overview of the timeline that the Gangwal family has been, exiting the airline. In February 2022, Rakesh Gangwal had resigned from the board of the airline after a feud with his co-founder Rahul Bhatia. Then in September 2022, he sold stake worth about 2.74%. He sold it for about 2,000 crore rupees. Then later on, a year after, his wife, that is in Feb 2023, so Shobha Agarwal offloaded 4% stake for about 2,950 crore rupees. Then in August 2023, they sold stake of about 3%, that is 2.9% stake is what they sold at a value of 2,800 crore rupees. Then in May 2024, the promoter entity again sold up to 3.4% stake, and then in August 2024, the family trust that divested about 5.2% stake for a value of about 9,550 crore rupees. And latest, that is in August 2025, which is what we are likely to see today, the Gangwal and Chinkarpur family trust, they are looking to sell about 3.1% stake via a block deal. And if that sale goes through and if that's the value that's going to be, the promoter group will be left with about 4.78% residual stake that would be valued at around 11,169 crore rupees. All right, then that's all the time that we have on this edition of Market Cafe. But don't go anywhere as the markets will take all the action forward.